What's going on, guys, and welcome back to another video. So I've been asked quite a lot now to make a video on when is the right time to sell your stocks slash ETFs. So in today's video we'll do just that, and I'm going to go through 5 reasons why I'd consider selling my stocks. And with all that being said, let's dive right on over to Trading 212. So here we are on Trading 212. We have about 9,500 in my account at the moment and up €1,192 in profit, or 14.5%. Now, since starting investing, this is definitely one of the hardest things I've had to come to terms with in terms of when to take profits. Now, psychologically, it's very hard, especially if a stock is going up in value, to actually cut your gains and just take the profit and run as such. So today I want to go through how and when I would definitely consider selling some of my stocks. A prime example here would be my financial pie. The 3 bottom stocks here in the form of JP Morgan and Chase is up 66.4%, Bank of America is up 73.4%, and Goldman Sachs is up just under the 90% mark. So definitely this would kind of come as a red flag as such of when you should actually start consider taking some profits. And it's not just my financial stocks that are doing this well. We can even see the likes of Alphabet here. Although we only have 1/5 of a share, it's up 60%. If we scroll down here as well, we have the likes of Caterpillar up 51%. And also such energy stocks as Chevron and ExxonMobil are up about 50 to 70% each as well. So the first reason I'd consider selling a stock is if it reached a certain percentage level in terms of profits. Now, a lot of people like to wait until it gets to 25 or 50%, or some investors even wait until they double the money and get to the 100% mark. Now, as a long-term investor here, I don't really plan on selling any of my stocks. However, as a dollar cost average in, we can even see here as a prime example Walt Disney. My current position was up about 40% only a week or two ago, but 28.92% is still fairly good in my opinion. But again, I'm not going to be taking profits here, because if you look at the 3-month chart, it's currently down about 12%. So going forward, even if any of my stocks are doing well and up about nearly 30%, I'm going to start looking at the 1 and 3-month charts to dollar cost average here, because there's always opportunities to take advantage of any downtrends. Now, one thing I would recommend with this point is that you should set out your goals before you even invest in a stock. So for example, let's say the bottom one here, Waste Management, is currently up 22.26%. So if I wanted to invest in here and I said, let's say we'll sell out at the 50% mark, I think that's a lot better, because you won't impulse sell or buy at any given time then, because you have an exact goal you want to achieve. So the second reason I consider selling my stocks slash ETFs is got to do with tax purposes. Now here in Ireland, you need to pay capital gains tax on 33% of any profits exceeding €1,270. Now that €1,270 is your overall profit and loss between all of your investments. So just because you made 10,000 on one stock, you could have lost 11,000 on another, so that offsets each other. So again, your overall tax, if you're making over €1,270 profit after you sell a stock in any given year, you're eligible to pay 33% tax. Now again, it's worth noting that you only pay this if you sell the stocks. You could be up 200% in your stocks, but if you don't sell them, you don't pay any capital gains tax. So for example, we saw earlier that I'm up about 14.5%, or just under the 1,200 mark. Now I will be coming up to that threshold of €1,270 soon. So what a lot of people might start doing is selling, let's say, €1,200 worth of stocks, because then you won't have to pay any tax on them, and then they usually kind of buy back in at the next tax year again. So there's definitely a lot of implications here, but if you do it effectively, you can actually save yourself a lot of money. Now, another reason people tend to sell their stocks is one I don't really recommend as such, because it's more kind of FOMO, or fear of missing out, is for other opportunities and new opportunities. Now, we've seen a lot over the last few months, particularly because a lot of people have sold out of their blue chip style safer companies and start to invest into the likes of Bitcoin, etc. Now, there's nothing wrong with that at all. It's your own capital, so definitely you can do what you want, where you please. But again, long term, I wouldn't really recommend this, because a lot of people do get burned, and a lot of people do make a lot of money as well, obviously, but it kind of seems to be the more kind of advanced investors that seem to take all the money from these newbies. So again, that's another reason why people tend to sell their stocks, is because other opportunities. Now, it's not just Bitcoin, there is other opportunities that I would recommend. For example, if the likes of, let's say, consumer discretionary sector was on a very bad downtrend and people wanted to get out and take the profits before they started to lose more, that's well and good. And let's say the tech sector was booming, they wanted to put more capital in there. There's nothing at all wrong with that. But personally, I don't do this. What I would do in that situation, if consumer discretionary was dropping as a long-term investor, if anything, I'd just be buying more and more of the discounted shares. Now, the fourth reason is one I would strongly recommend as well, and as a long-term investor, you can't always be right, and probably the best investors kind of admit when they're wrong and kind of take their losses as such, and that is if the fundamentals of a company you're investing in long-term have changed. Now, a prime example here would be Plug Power. Now, the reason I bring Plug Power up here is because they were the top holding in my iShares Global Clean Energy ETF, and in last March, Plug Power came out with a lot of fund accounting errors. Now, that's not really a lot of fundamental change here. However, it has a very big impact on the company. Now, a lot of people will say this is a great opportunity to buy in at discounted prices. But again, in fundamentals, if any fundamental change in the company, you really should consider reevaluating your investment because it's not the same as it was when you got in originally. On screen, we can see how much of an impact this fundamental change / error has had on this company. Now, as it stands, it's currently trading about $33 at the moment. Now, it had highs of about $73 before this fundamental change or financial accounting error, and as May 9th, it dropped as low as $20.07. Now, that's a 75% drop of its highs, all because of this fundamental change / accounting error. And the fifth reason why I consider selling a stock is due to rebalancing. Now, a lot of people use the pie feature on Trading 212 if this is your broker. Now, we can see on screen when creating a pie, you need to allocate a certain percentage in case you want to auto invest. Now, I don't auto invest at all, I manual invest, but just for the purpose of the pie, I set them all evenly. So it's about 20% here. But let's say I did want to keep everything at the 20% level here to have an even amount of capital invested in all five. We can see here, for example, with JP Morgan, we'd be underweighted by about 3.4%, whereas the likes of Visa, we'd be overweighted by 1.6%. A lot of people rebalance their portfolios, maybe quarterly or even semi-annually. A lot of people even do it monthly for that fact. But personally, I probably should be looking into this myself a bit more as well, but I don't really rebalance my portfolios too much. I just really focus on the companies that are in the red or in the red on the 3-month charts and kind of pump money in there to get a cheaper overall average cost. But again, this is definitely a main reason why a lot of people sell or adjust their shares is because of rebalancing. So that's the 5 main reasons why I consider selling some of my stocks. Again, just to go through in very brief synopsis. Firstly is if it reaches a certain percentage gain, such as 20 or 50% mark. If the fundamentals have changed, would be the second reason. Other opportunities arising, so that's the third reason. The fourth reason would be to take advantage of tax, and the fifth would be rebalancing. I'd be very interested to know as well in the comment section below what your kind of thresholds are in terms of when you would consider selling some of your stocks, and who knows, might be even adding some of them to my own list going forward. So with all that being said, that's the end of today's video. I hope you enjoy the rest of your Wednesday, and I will see y'all in tomorrow's video.